Bitcoin's price takes another dip as $100 billion in market cap vanishes from the crypto market, pushing Bitcoin below 83,000. How much further could it drop? And if Bitcoin loses this key support, what's next for crypto? Be sure to watch today's full video as we break down Trump's trade war, tariffs, and the economy. This is a crucial week for cryptocurrency. In the middle of the night, while most were focused on other topics, the Office of the Comptroller of the Currency made a major regulatory change. This just happened. U.S. banks are now permitted to act as validators on public networks, meaning they can support and validate the Ethereum network, Polkadot, or any other blockchain. This means institutions like JPMorgan or Wells Fargo could now choose to run nodes, support Ethereum, and actively participate in these networks. Additionally, banks can now custody crypto for customers and hold stablecoins, something that was never legally allowed in the US before. This came from a newly released letter from the Office of the Comptroller of the Currency, stating, "This letter rescinds Interpretive Letter 1179 from November 18th, 2021. It also reaffirms that crypto asset custody, distributed ledger, and stablecoin activities, collectively referred to as crypto asset activities, are now officially permitted." Back in 2020 and early 2021, the OCC issued 3 interpretive letters discussing whether national banks and federal savings associations, banks, could engage in crypto-related activities. Regardless of what was said in those prior letters, here's what's permissible today. The OCC has revised its stance, stating that since the issuance of Interpretive Letter 1179, their staff has gained greater knowledge and expertise in crypto asset activities. With this experience, they determined that Letter 1179 is no longer needed. The goal of this rescission is to reduce burdens, foster responsible innovation, and enhance transparency. So when we say U.S. banks can now validate public networks, custody crypto, and hold stablecoins, this marks a first in American financial history. Yet, why does crypto continue to decline? Even with these massive regulatory shifts, the market keeps crashing. Never before have we seen a government administration this engaged in crypto. Our David Sachs is vocal about Bitcoin and takes a strong public stance on it. Listen to this 60-second clip.
It's obviously, except I will say this, we do think Bitcoin is special. And I can get into the reasons
explain why. That's a great thing, yeah.
Well, explain Bitcoin's the original cryptocurrency. It's the first one. It's the only one that doesn't have an issuer, right? It's very decentralized. It's, in crypto, they call this the Immaculate Conception. We don't really know how it got here. We don't know who Satoshi is. It's almost mystical, you would say.
Yes.
It's the most valuable one. It has a $2 trillion market cap, and it's the most secure. It's never been hacked, right? So we're now, over 15 years into this journey. And there's been a lot of people who've been skeptical along the way, and there's been a lot of ups and downs. But here it is. I remember back in 2011, I think it's the first time I bought a Bitcoin. I think it was at $120. Now it's at $90,000. Again, there have been all sorts of wild swings along the way, but this thing just keeps chugging along. And you can think of that $2 trillion market cap as like a $2 trillion bug bounty. If there was a way to hack this, there's every incentive in the world. And by hack, I mean like to double spend, create basically a counterfeit Bitcoin, I guess would be the way for people to think about it. And so the security,
a miracle it hasn't been compromised. I think we can all say that.
Well, I don't know if it's a miracle. I think it's exceptional design.
And think about that. For
Bitcoin's first 15 years, from its inception until early 2024, it remained in the shadows. It was viewed as a threat to the U.S. financial system, or an unnecessary distraction. Now, we have an administration actively explaining and recognizing its long-term value. Think about the implications of that. And with growing clarity around other cryptocurrencies, the US government is rumored to hold significant amounts of digital assets. These are the largest known government crypto holdings. As it was recently revealed, they are assembling a digital asset stockpile. Reports suggest they own around 50,000 Ethereum. Here's David Sachs weighing in.
Digital assets the federal government has. I've seen reports that it might have, for example, 50,000 ETH, which is Ethereum. But again, we need to get to the bottom of that. When we figure out exactly what the assets are, we're going to move them into the digital stockpile. The purpose of the stockpile is responsible stewardship. It's a place for safekeeping. It's a centralized, you could say, account under the direction of the Secretary of the Treasury. And the Secretary of the Treasury will figure out how to maximize the values of these holdings.
Additionally, speculation suggests the U.S. government holds BNB, TRON, Uniswap, Chainlink, and Sandbox. If and when these holdings are confirmed, they are expected to be retained long-term. If you appreciate these daily crypto updates, be sure to hit subscribe. Now, why is Bitcoin falling today? In the short term, it's the trade war. The most extreme trade war has officially begun, as Canada, Mexico, and China are outraged and have all announced countermeasures against Trump's tariffs. Emotions and liquidity drive markets in the short term. Tariffs, by nature, slow commerce and economic growth. Here's a 2-minute explanation of what's happening with tariffs and the trade war. If you already understand this, feel free to skip ahead.
The most insane trade war has officially begun because Canada, Mexico, and China are pissed and have now all announced their own plans on how to retaliate against Trump's tariffs. So what the hell is going on? Well, you see, yesterday Trump's promised 25% tariffs on Canada and Mexico and 10% on China officially kicked in. What that means is that any goods sent from these countries to the United States will now cost companies 25% more, or 10% in China's case. So for example, if a Canadian business sent a car to the US that cost $50,000, today US companies will pay a $12,500 tariff at the border. So the price of your once $50,000 car is now actually $62,500. Why would Trump purposefully make things more expensive for Americans? Well, 2 main reasons. The first is more of a longer-term, unguaranteed benefit, but it would be to change consumer habits to buy more American-made products and incentivize more international companies to manufacture in the US. In theory, that means a stronger US economy, more stable jobs, and less dependence on foreign countries. The second reason for imposing these tariffs would be to use them as a tool to pressure Canada, Mexico, and China into doing what Trump wants. Some of these things that he's publicly mentioned include renegotiating trade deals, stopping illegal immigration, and the flow of fentanyl. There's also the far-fetched idea of Canada becoming a state of America. But here's where things get interesting, because instead of just doing what Trump wants, Canada has clapped back with a 25% tariff of their own, and Mexico said they're doing the same but haven't announced the percentage yet. China reacted a little differently by preparing to file a lawsuit with the World Trade Organization. So why is Trump not backing down? Just listen to this. In 2023, Canada sent 76% of all of their exports to the United States. That accounts for roughly 19% of their entire GDP. In 2024, Mexico sent 78% of all of their exports to the United States. That makes up 37% of their entire GDP. But for America, their exports to both countries combined only make up roughly 2.7% of their entire GDP. So simply put, even if they do retaliate, getting into a tariff war with the United States would hit Canada and Mexico much harder. Trump knows this, and he's using it.
I really like this explanation. Be sure to give the video a like to help spread the word. Essentially, this means short-term uncertainty and short-term pain. The silver lining? When economic conditions worsen, the Federal Reserve is forced to act. Their next meeting is scheduled for March 18th, just a few weeks away. That's the good news. Now, taking a look at Bitcoin's technicals, this recent dip still represents a higher low. The uptrend remains intact. However, given how quickly we rallied, it's always possible for an equally fast drop. Volatility works both ways. The next key support level, which we've been tracking for a while, is around 72,000 to 73,000. Even if Bitcoin retraces to 67,000, it would still be considered a higher low in the broader picture. Still bullish, in my view. Maybe that sounds extreme. Of course, if the economy slows dramatically and we enter a full-blown recession, that changes everything. No one knows what Bitcoin will do tomorrow. Not me, not you. To wrap things up, here's a look at Bitcoin's price behavior after every halving cycle. See you in the next one.